Hello, folks. I'm Bob Bruce from Integrity Wealth Consulting with the September 2017 Economic Update. In this video, we'll cover three main topics that were part of the economic headlines in August and how those headlines influenced the markets and the overall economic outlook. We'll also try to give you some insight into what those influences mean for you, the investor. Now, please stay tuned at the end of this video for our required disclosure statement. Our three main points this month include the overall market, the jobs market, and the possible effects and the influences on the economy after Hurricane Harvey hit the Texas coast and Hurricane Irma hit Florida. Harvey was a catastrophic storm that made landfall on August 25th, causing fatalities, massive flooding in Houston and the surrounding areas. And they're still counting up the damages in Florida from Hurricane Irma. Let's briefly review how the market looked for August. Wall Street closed higher at the end of the month as investors reacted to economic data and held on to guarded anticipation of Washington's promise for specifics on the tax reform plan. Government officials have said that President Trump's administration is on track to implement tax reform by the end of the year. U.S. stocks advanced on the last day of August with the main indexes posting their fifth consecutive monthly gain. Pretty good. The S&P 500 finished in positive territory. Since the beginning of the year, the S&P has climbed 10.5%, while tech-heavy NASDAQ surged 19%. In an atmosphere in which the economy and earnings continue to grow, markets will also climb. You will notice we did not spend any time on geopolitical events because the markets didn't appear to spend any time on that either. This is typical because while geopolitical events can shake up the markets from time to time, they usually don't have a very long-term influence. Let's shift now to the jobs market. As the hiring pace decelerated in August, employers still added 156,000 jobs. In addition, the unemployment rate has risen slightly to 4.4% from its 16-year low of 4.3%. This rate is still considered by many economists as at or near full employment. Additionally, there was continued slow growth in wages, with the average hourly wage increasing just a few pennies. We'll have to watch and see just how the two hurricanes will impact the labor market. And speaking of the hurricanes, let's discuss how those storms has affected the economy so far and what it may cause down the road. At least 10 oil refineries just in Texas alone have been shut down by Hurricane Harvey. Combined, these plants are able to refine as many as 2.2 million barrels of oil a day. Harvey has brought record flooding to the oil heartland of Texas and paralyzed a quarter of the U.S. refining industry, and this has caused oil prices to fall due to a lack of demand for raw crude from the refineries. Conversely, U.S. gasoline prices have risen substantially due to the forced closures of those refineries. The government has tapped an emergency stockpile, and a European flotilla was on its way to the U.S. just after the storm with millions of gallons of gasoline, and these efforts hopefully will prevent prices from spiking up further. For the job market, the two hurricanes pretty much have shut down a lot of businesses, both in metropolitan Houston and also in Florida, but the storms did not have a big impact on the August job reading. The department collected its data before both storms hit land. Now, those hurricanes had a negative impact on September jobs. If businesses in that region, we're talking about Houston here, are still closed in mid-September when they collect data, that storm just might give employment a lift when cleanup and reconstruction begin. And that could also be true in the state of Florida. Overall, the economy and the markets remain strong, and we hope that it will continue that way. That's it for our September update, and as always, if you have questions or concerns about what we've discussed, please contact our office at 724-940-9060. We'll see you again in October.